Hello, fellow traders. 'Tis I, the Rumpled One. It is Wednesday, January the 8th. The year's 2020. Let's talk trading. How to fix your trading part 3. Um, you know, maybe I should have made this what's coming up part 1. It's real simple. I want you to look at the chart that you use most often. You probably have a couple of indicators on there. I want you to say out loud what each indicator does, what its purpose is. If you cannot articulate its purpose, delete it. Remove it from your chart. Because if you've been watching my videos, if you've been watching other traders' videos, if you've been reading other traders' blogs, their papers or content, whatever you want to call it, many times you're going to hear that they say, keep it simple. And this is one way of keeping it simple. So if you've got some indicator on the chart that you really can't say why it's there or what it does or how it does it, chances are you truly don't understand it and it serves no use. So if you don't understand MACD, stochastics, PVI, RSI, get rid of them. Chances are you don't need them. I mean, of course, I wrote the all you need to trade is a horizontal line, so you know what I believe in, horizontal lines. But for the most part, a lot of those indicators, you really don't need them. So to sum it up, if you don't know what its purpose is, get rid of it. If you don't know, if you don't understand the calculation or the formula behind it, get rid of it. Only have on your chart what you need to do to take action. And in trading, you're either deciding to enter the trade, exit the trade, or you're waiting. So if that indicator doesn't help you do at least one of those three things, enter, exit, or wait, just get rid of it, okay? But there's something that you are not allowed to get rid of, and that's your money and risk management. Because I don't want you losing any more in any particular trade than you're willing to lose. So whether it's 1%, $1, whatever it is, that's up to you to decide, but you can't lose any more than that on any one particular trade. Now, boys and girls, fellow traders, you all know these videos are for educational purposes only, right? And that your results may vastly differ from my results. And that investing, trading can be very, very risky. You can lose all your money. So if you're looking for trading advice, investment advice, financial advice, seek it from an accredited financial professional. That way, if you lose all your money, you know you took the advice from an accredited financial professional rather than some guy on YouTube or some guy or some girl, just some other trader on a trading forum. I got to remember not to use binary language. It's the year 2020. It could get me in trouble. Somebody could, report me to YouTube. Anyway, let's see. So we're looking at the weekly chart here on dollar yen. And we can see that dollar yen has moved up. Okay. Now, it started out, it went below the previous week's low, then came and then shot up through that lower wick zone. Now on the gap side, we have 1, 2, 3 that haven't filled. Now, if you remember yesterday, I think there was like 5 or 6. So, you still had a chance to take advantage of a couple of those trades. So these indicators, right here, that's the pivot point, the weekly pivot. So we can see that on the chart. Okay, on the daily, I want you to look at something here because we talked about this yesterday. Okay, in fact, hold on a second. I've got to do something. Okay, fellow traders, I'm back. Now, remember we were talking yesterday and I said, you can use the cursor here. Now, remember I said how price had entered and went through this previous lower wick zone for these two candles over here? Well, look what happened. It did it again today, came back up through that wick zone, through those wick zones, through this wick zone. So those over here, this one over here, and continued up. Once again, really simple. We went through the yearly open. We're now 45 pips above the yearly open. So, you can see there's a lot going on here. But you didn't really need some squiggly line indicator. You could just basically, if you have the price cursor right here or price line, you would have seen it coming up through here. This is really not that difficult. So you can see there's really no extraneous indicators here. And here, now once again, we had the first day of the week here. There's the range. It exited the range on the lower side, came back up through, exited on the top side. Here's the high of the first day of the month range, and it went through that. So if you take any of those trades or all of them stacked on, you can see here, high day of the month, you're up 32 pips. Once again, very simple stuff. Nothing complicated. Okay, and this particular configuration of the dashboard is just showing where price is in relation to the year. So you see we're making a new yearly high, 153 pips off the yearly low. Okay. Now, here again, remember the weekly buy zone. Yesterday, we didn't have an opportunity, but today you see here it came down through, exited. You could have gone short. Maybe you would have stopped out. Maybe you would have taken a couple of pips, break even +1 possibly. But then it crossed the weekly open. And remember, I told you, you want to take the cross at the weekly open, then you put your stop below here. Then you can also stack on, add on when it hits the weekly buy zone. And then you can see there was profit to be made. Now, we spoke about this yesterday and a few days before that. We went into that monthly inside bar. If you're taking this trade, you see right now you'd be up 71 pips. And notice we're now inside the weekly inside bar from 3 weeks ago. So it could either exit to the downside or continue to the north side. Once again, simple trades. In this configuration, all it does is tells us where price is in relation to the inside bar. And if we have an inside bar trade that we could participate in. Okay, on the back to the daily chart, we've got some really huge ranges here. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 over 100. And you can see how price exited the previous day's low and exited above the previous day's high. Once again, simple trades, not requiring many indicators. You can see we put in a yearly H1 this hour, yearly H1 highest open that is, and here's all the lowest opens down here. And you had an opportunity. The pivot point got taken. The missed one got taken out. The current one was taken out. So on this chart, we're just looking at close to the open, which is something, I call this the price GPS, close to open, high to close, low to close. You can triangulate where price is and you know what it's doing. Rat zone on the euro, as you can see, it's coming down. So green rats get ready, but red rats get ready on the dollar yen. Now, there's that monthly pivot, 108.91. The weekly we took out yesterday. You see we returned to that monthly pivot here. So once again, showing how strong or how profitable those pivot trades can be. Why is it doing that? It really killed that pivot here. Took out this missed pivot right here. Let's see. I don't know if there was a missed pivot here or not, but you can see we definitely took out some missed pivots. Once again, a simple trade, trading from the open towards the pivot, looking for that distance or that gap between those two levels to be filled. So you see we missed the pivot yesterday, but took it out today, right there. That was a missed pivot from yesterday. So over here on the missed pivots, you see 107, we missed a pivot, but here on the missed pivots plot, we took it out so it doesn't show. And so the missed pivots plots all the missed pivots. And on the weekly, we still have that missed pivot right here. Looks to be taken out. And you can see how many pivots we missed pivots all the way back to 2002. Because remember, I upped the number of bars we were looking at just out of curiosity. And also it shows you just how often those pivots are missed or how infrequent they are missed. And as always, price doesn't like staying in between these two lines. Within that 10 pips, we have 154 pip range at the moment. So obviously it didn't stay between any two lines. Wick zone in and out, you can see that. Once again, simple horizontal lines can be profitable. No more than what you need. And here we go on the chart I like to look at and trade from sometimes. We have the previous day, week, and month, open, high, and low, because these are always set in stone. These lines don't move. And the Einstein line, well, you can see what happened right there. Boom, right? And as far as the tick chart, it's just going nuts because of the huge movement we've had in price. Range, we hit that. We've hit the upper weekly ADR. We're in the upper daily ADR. You can tell that because of the different color here. So once again, we can look for a reversal out of that ADR range. And so right here, you see price came down in the lower ADR, reversed out, and now it's going all the way to the upper. So once again, simple calculations off of the range. So we had a max ATR, average trading range, or average true range, was the ATR 2, and the min was the ATR 14. And look at the range. Weekly range, daily range, the same, 155. Everything's happened today. And remember yesterday, I was showing you a little trick using TRO HL5 indicator, and you look to see where price could start to take out or reverse. In other words, looking for targets based on whether or not these horizontal lines have crisscrossed. And somebody mentioned these could be like zero lines, and I've got to look at the indicator because I really would like to have it so we can show which opens haven't crisscrossed, but I have to figure out there's something in the code because obviously when I look at the bar, it's crisscrossed. Actually, this one hasn't because the low wasn't lower than the open. So that's it for today, fellow traders. Just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks.